Here in this market environment, there is three things that are going to move stocks, that are going to move AMC. You have economic data, you have the Fed, you have, I guess, four things. You have earnings, and you have this Israeli war. Now, we went over in the last video some of the developing situations that have happened today over the past 12 hours or so. Iran's threatening getting involved in this conflict as early as tomorrow. The U.S. has sent another aircraft carrier strike group to the region of Israel, the Mediterranean Sea. You also have a 2,000 troop unit of Marines and expeditionary force that is being sent closer to Israel that has not yet gotten official orders, but has quite the capacity as well. This is not going to be good news for our markets to start off the trading week. But as long as the situation does not escalate, then the markets will get over this. Now, on one hand, we haven't even seen the invasion from Israel yet. There's a lot of civilians. There's going to be a lot of collateral damage here. And this is something that is probably not going to get better. It could get a whole lot worse. This is probably going to be the number one thing that affects stocks this week. But you also have, like I said, earnings, economic data, and Fed speakers, in which we're going to get into here in this video. I want to give you guys an update on all of the data you need to know, including the option activity this week for AMC stock and what I expect from this stock this week. Keep in mind what we said in the last video. You did see a new record being broke via the Taylor Swift concert film, in which AMC is basically the host of distribution for this film. Well, it just broke a record. So we have all of this information for you and much more here in this video. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section, guys. So first things first, like we said, what you seen on Friday was a defense trade. You seen gold up 3.5% roughly, including after hours. You have not seen a move like this since almost 4 years ago now, the crash in 2020. So this is not exactly the greatest thing that we've seen on Friday. You also had bond yields going higher as investors bought the bonds. This is definitely a fear move, although this is a kind of good for yields. The potential implication here could be massive. The Strait of Hormuz does carry about 20 to 30% of the world's supply of oil. Saudi Arabia here, Iran here, they're not exactly happy about what's going on over in Israel. So if they want to cut off that supply of oil, they most certainly can. So you definitely want to be watching that. Iran did kind of threaten this in a strange way. They said, hey, you know, if you guys don't back off, essentially, we could, do something. Have far-reaching consequences, or ricocheting far-reaching consequences is what they said. We went over that in the last video. I don't know exactly what that means, so I don't want to go out there on a limb too far, but it either has to do with oil or something a lot worse, a D-bomb, and nobody wants a dirty bomb at all anywhere. So probably, I would imagine, has implications to oil, which could have big implications financially to the U.S. economy. So this is why this conflict is a little bit more sensitive to the markets rather than even the Ukraine situation. That did cause quite a pullback back in February of 2022, but you also had the Fed raising rates around the same time. So who knows exactly what affected the markets in 2022? Probably Ukraine, probably the Fed, probably both. But this situation is not great. And this situation could actually cause the Fed to need to U-turn and actually cut rates. So you want to be watching that pretty dang closely. Now, what we have this week as far as economic data, let's run through the calendar here. First things first, go over the expectations, everything you guys need to know. So on Monday, you're not going to have much. You do have Fed Harker that speaks at 4:30 p.m. It's going to be a pretty dry day. I think we're going to be consumed by Israel headlines, and that's what is going to move the markets coming tomorrow. Now, for Tuesday, you are going to get at 8:30 in the morning the inflation rate out of Canada. I don't think that's going to be too important, but at 8:30 in the morning you're going to get retail sales month over month for the US. Now, in this market participants are trying to figure out, are we going to have a soft landing? Are we going to have a hard landing? Are we going to have a slight recession? No recession? Nobody really knows. Now, about 70% of the US GDP comes from consumption. So if retail sales were really bad, your odds of a recession would be much higher. I mean, look at this chart. You were negative on your retail sales for September as November and December, and you had a lot of fears of a recession during this time in 2022. That's when stocks were hitting new lows right around that period of time. So that would obviously not be the greatest thing if retail sales came out bad. You're expecting 0.3%. Last month's reading was 0.6%. So you are expecting a contraction. You're going to get a lot of other data as well. Retail sales excluding autos, month over month. Retail sales excluding gas and autos. Retail sales year over year. Red Book year over year, industrial production month over month, year over year, capacity utilization, manufacturing production month over month, year over year, all of that, business inventories as well. Fed Bowman will be speaking at 9:20 in the morning. Some of your Fed speakers might be important here because there's really no chance the Fed raises rates again from here. The probability of the Fed actually raising rates again, we can go ahead and look. For November, it's 6.2%. For December, it's 28.8% chance. So you're not expecting the Fed to raise rates at all, basically ever. At least for this cycle. The rate hikes are basically over at this point. This Israel situation, could cause rates to, potentially even be cut a lot sooner than expectations. We'll have to wait and see. Again, because if Iran or Saudi Arabia did put a lot of upward pressure on oil, to some degree, some upside pressure, just making the price of oil go back to maybe where it was in 2022, we're in a different spot now. Right? So imagine if gas was $10, $15 a gallon. Sure, would that be inflationary? Of course. But the bigger effect is going to be the economy is going to freeze. There is not going to be any activity out there. Obviously, some people are still going to be able to do things, but by and large, the economy would stop. That would not be an environment in which you would want to be really restrictive with monetary policy, okay? So on one hand, it would be inflationary. On the other, it'd be massively deflationary because we would go into a recession at that point. Hard landing, soft landing, that would no longer be a question. And that's a big reason why the markets are so sensitive to this situation. Now, if you take a look at Wednesday, you're going to get the inflation rate out of the UK. As well as building permits, preliminary numbers for the month of September, expecting 1.45 million. This is usually not the most important data. Housing starts, you are expecting that to increase by about 100,000. That could be a little bit of good news in this market where really real estate has not been doing a whole lot of anything. It really hasn't been coming down. It really hasn't been going up. It's just traded sideways for a while here. And then Wednesday, you're also going to get at noon Fed Waller that speaks at 12:30, Fed Williams, and at 1 p.m. Fed Bowman. You are going to get a 20-year bond auction. You want to watch the long end of the curve when it comes to these bond auctions. What we seen, I believe that was on Thursday, you had a big down move right after 1 p.m. So almost halfway through the trading day, a little bit over halfway through the trading day, you had a 30-year bond auction that nobody showed up to buy. Quite the opposite of the fear move, right? Everyone's buying bonds now. They weren't on Thursday. So these bond auctions are going to be important. If yields shoot down, markets might initially like that, but you have to remember or ask yourself, why are yields coming down? Are yields coming down because people are fearful, or are yields coming down because the Fed looks like they're not going to raise rates again? They're going to cut rates sooner and inflation is falling. If it's a fear move, it's not a good move, okay? Don't get faked out by the markets going higher upon the bond auction, or yields just going lower if the move lower in yields is caused by a fear move like we seen on Friday. Yields were down, 30-year treasuries were down like 11 basis points, but yet, stocks were also down. The NASDAQ got destroyed on Friday, and that's because the fear move was setting in. Now, on Thursday, you're going to have Philadelphia Fed Manufacturing Index expecting negative 6.4. You want to see this positive, but you've been negative for so long. Last month's reading was negative 13.5, so a negative 6.4 does not sound all too bad. You are also going to get initial jobless claims for the week of October 14th, expecting 213,000. I don't know when the UAW strike or any of these other, layoffs are going to be reflective in this data. I believe it will at some point. We're just waiting to see when that actually does get reflected. I think it highlights the government's data is so lagged behind. Even the initial jobless claims, you got to take them with a big grain of salt. Now, 8:30 in the morning as well, you're going to get the Philly Fed business conditions, Philly Fed CapEx index, Philly Fed employment, Philly Fed new orders, Philly Fed prices paid. Especially prices paid is going to be important. Obviously, you want to see that come in as low as possible. Last month was 25.7, so still pretty inflationary compared to Philly Fed new orders that came in at negative 10.2, which shows the economy maybe not doing as good as what the Philly Fed prices paid might actually look like. So there you have that. Existing home sales for September are expected to decline from 4.04 million to 3.89 million, thus meaning there's even less houses on the market now than there was last month. That's not exactly good for prices falling. And then your big catalyst for Wednesday is going to be Fed Chair Powell that speaks at noon. I don't know exactly what's on the calendar, why he's speaking or whatnot. But anytime Powell speaks, the markets tend to pay attention. Now, Friday, you're going to have at 2 a.m. in the morning retail sales, a lot of retail data coming out of the UK. That could be important for futures Friday, but I think by that point, the markets are probably going to be reacting to earnings as well as this Israel war situation. So in a weird way, after Wednesday, I think the big story will become earnings. As you can see here, this week, you do have quite a few earnings, a lot of banks that are scattered here and there. Bank of America, Goldman Sachs, they're going to be reporting Tuesday morning. Charles Schwab is Monday morning. A couple regional banks Monday afternoon. United Healthcare Tuesday after hours. Interactive Brokers, JB Hunt, Pinnacle, these boring companies that a lot of you guys don't invest in are going to be reporting for a majority of this week. Now, Wednesday, pre-market, Morgan Stanley, Abbott, Bancorp, M&T Bank, NASDAQ, and Ally, First Horizon as well. Those regional banks are going to be important to watch. Big bank earnings we seen on Friday were pretty dang good, but how do the regional banks look? And then Wednesday and after hours, big story is going to be Netflix and Tesla. If they have bad earnings, well, that's obviously not going to be great for the markets. Netflix has been reacting pretty poorly lately. The stock's been falling. It's really hard to say exactly why. Tesla, on the other hand, is one of the most bullish stocks in the markets right now. So a little bit of a divergence here between the two names. Hopefully they do come in at least around expectations and you don't get that big plummeting. Now, Wednesday and after hours, you're also going to have Lam Research, Las Vegas Sands, Alcoa, Discover, Columbia Bank, Zion, Steel Dynamics, and Crown Castle. So specifically Tesla, Netflix, Sands, Alcoa, Discover. These are more of your technology names. Alcoa is a software AI platform, right? Discover's credit cards, online payments. Netflix, obviously. Tesla, obviously. So you definitely want to be watching these guys. Now, Thursday pre-market, you're going to get AT&T, American Airlines, TSMC, Blackstone, KeyBank, Truist Bank, Union Pacific, and Snap-on. Again, more regional banks. Thursday after hours, Intuitive Surgical, Bank of Ozark, WD-40, among some notable names. Friday pre-market, a lot of banks, including Huntington, Comerica, American Express, and that is basically it, guys. So that is what you have this week as far as earnings. Again, Wednesday is going to be important. This Israeli war is going to take precedence over really all of this other, data and earnings, in my opinion, at least until Wednesday. After Wednesday, if the situation is not getting worse with Israel, if Iran is not involved at that point, if Hezbollah is not involved, then earnings will take precedence over all of it. So it's really hard to say what's going to happen with AMC stock. On one hand, we got some really good news. The Taylor Swift movie is doing some incredible numbers, breaking records, but it's not really one of those things that always moves AMC. Sometimes these kind of, news stories do move AMC stock higher, but a lot of the time they don't. So it's really hard to say exactly how AMC stock is going to react, but I do believe AMC stock will be bullish this week. I think AMC is going to go through a multi-100% rally. As long as the Israeli situation does not escalate and spiral out of control, I expect AMC stock to be bullish. Maybe that's the best way to put it. Now, just a quick run through of the Ortex data. You have a short score of 58, $170.45 million worth of short positions on AMC. Estimated short interest off free float at 7.84%. Free float out on loan at 11.35%. Shares out on loan 22.44 million. Days to cover 1.3. Cost to borrow 1.94. And utilization of 47.05. Now, if you take a look at the option activity here, specifically the put to call ratio, that is at 0.76. Another big reason why I do think a multi 100% rally is coming, because we got a lot of these multi 100% rallies, 1, 2, 3, 4, 5 of them, when the put to call ratio was around where it is now, or even lower, a little bit higher, a little bit lower, not a big deal. But when the put to call ratio went dramatically higher, 1.8, 1.7, 1.6, you didn't see any of those really big rallies we had seen in the past. Now that this put to call ratio is much lower, it could be easier for AMC stock to make that big upside move. Now, if we take a look at the option activity for October 20th for this week, you have 31,000 calls currently in the money and 133,000 calls that are out the money. In the money puts at 13,441. Out the money puts at 92,557. Now, something that I have reported to you guys already here on this channel is this, and I do think this is important, and I think it could add more upside pressure to AMC stock potentially. The new US SEC rules to shine a light on short selling. Essentially, what's going to happen is we're no longer not going to get short positions being reported. If you look at 13F filings, you will see calls, you will see puts, you will see shares owned. Very rarely are you going to see a short position. Here is one short position that is public that they did put out there, but most of these filings are not including short positions because they legally don't have to. Now, here, due to this update, this new rule change, essentially, is maybe what you can call it, you're going to see who's short, how long potentially they've been short for. You're going to see the collateral that is used to fund this position. You're going to see who's involved, maybe Goldman Sachs lending out to a Tiger Capital or whoever else. You'll be able to see that information. You'll be able to see the dollar amount, how much collateral was set aside for that loan. A lot of information. So if there's people out there that don't want that information to go public, that don't want to be potentially on the back end of another short squeeze, that could give you more upside pressure in AMC stock to maybe start covering on some of those short positions. So that's something to keep in mind as well. Not really something that you can hang your hat on, but it's good rather than bad. I mean, that's good news in my book. Now, AMC stock, you want to see the stock hold support at the 8-day moving average. Who knows if it will? $9.57 is where that is. Right now, AMC stock is $9.42. So we'll have to see. As long as AMC stays above about $9, about $9 per share, that's going to look better than not. As long as you're above 9, you can't argue with it too much. That is above your longer term downtrending line of support, connecting the lows that you've seen, back here in May of 2022 and recently, even more extended than that. You could honestly extend this line out to something like that as well, and that could still make sense, connecting the lows from even the start of 2022. So a longer term downtrending level of support. If you hold that and can start to find support there and make your way to the upside, that's going to look really, really good. So that's something that hopefully does happen. If you look at the RSI, that is at 42.42, not quite as oversold as it has been recently. That is good news. And the MACD is now trying to go positive here, so that is also good, even though we did see that big down day on Friday. It didn't affect the MACD all too much, but give it a couple days of red, and the MACD will start to look a little bit more bearish. But as of right now, it looks pretty dang good, if I were to say so myself. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time as well, link down below in the description of this video. We would love to have you and welcome you with open arms. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.